future might be going. So to that end, I wanted today to really just review, I think I have 3 trends, just very high level trends to talk about, to look at how we see those trends impacting specifically the banking industry abroad, around the world, and then discuss possible impacts here in the US. So I have an opinion on what I think the impacts will be. I think we have some poll questions as well that might kind of get to where you guys think things are going. So first and foremost, I want to talk about open banking. So for those who are not familiar with open banking, it's a trend that is primarily driven by regulation. So the PSD2 regulation in Europe and the UK basically required financial institutions to reveal some of their data, to publish open APIs, and let developers, new businesses, digital banks, et cetera, access that data and essentially build a layer, sort of a service layer on top of your banking layer. So this had all sorts of impacts. The idea was to give consumers back ownership of their data and secure their privacy, right, across Europe. That's a huge issue, is just how do you control data and control consumer privacy. And we've obviously seen a lot of impacts out of that, specifically in Europe. I think the #1 impact is the rise of digital banks. So if you have ever been to the UK, or if you've seen kind of some of these startups that are coming out of the UK now and into the US, there are all sorts of digital only banks. Some people call them neobanks or challenger banks in the UK. And what they've done is they've taken advantage of these open banking APIs to build digital layers with really enhanced consumer experiences on top of the traditional banking industry. So what this might look like is targeting either a specific segment. So maybe you said, I want to start my own bank and I'm really going to go after Generation Z, and it's going to be fully integrated with TikTok, whatever it is. The other way they might segment the market is they might go after specific products. So for instance, you can think of a startup like Klarna in Sweden, which really tackled lending first and foremost, and really lending at the point of sale. A lot of these challenger banks just started with very basic checking or savings accounts and a debit card. Monzo is an example. I just pulled one example. I think there's something like 20. If you Google it, you'll see a ton. And you'll see a lot of headlines about which banks are coming to the US. So again, these are banks that are digital only, meaning they do not have any branches, is the biggest difference. And so the question for the group, and I think Dan, you can start a poll, would be who in this call would use a digital only bank? Is this a realistic solution for the US? Oops. So it looks like maybe about half the group is using a digital only bank, and all the time even. So we can see here in the US, it's changing already. Close that. So the big question in the US market has really been with open banking, is this regulation coming here? And if it is, how much is it going to change the way that banks do business today? And frankly, just the way the market dynamics work, that MasterCard doesn't really see regulation kind of being the primary driver of change here in the US. But instead, we do see that this international competition could have an impact. So #1 way you might see this is that the global players who have had to adopt open banking in Europe and abroad are going to bring that technology and that expertise back to the US. So think of a Citibank, which is really all over the world. They have had to adopt these regulations. They've had to build all these APIs. Now they have a team of developers who can do this. They have business leaders who understand how this platform type of bank can work. And they're competing with digital banks now abroad, right? So they'll bring all that expertise back, and we might see some of those global players really kind of sustain their advantage over smaller banks here in the US because of that expertise. The other thing that we might see happening is, as they bring this expertise, I don't believe that they are going to start publishing open APIs so that you can start accessing your Bank of America data on the fly from any developer console. But we see with all of our clients here in the US that they actually are investing very heavily in what I'll call closed APIs, or really just service level architecture. So I've seen this personally more on the commercial banking side, where clients are used to getting very, very custom service. Think about a Google or a Facebook kind of signing a large commercial banking contract with one of these national banks. Typically, they might have some kind of custom implementation. Well, now that's looking like APIs being handed from one team to the other and saying, you want to build your own custom treasury app? Here's everything you can do with our data. Here's the API book. We use the password to access it, and go on your way. So the big thing to note here is that these global players are going to likely have an advantage when it comes to open banking expertise, and we might see that have impacts on the market down the road. Next trend I want to talk about. This is a big one, and it may be a bit overplayed, but the trend is basically mobile. So one thing that stood out to me in just kind of reading about a little bit of research for this presentation is that in many parts of the world, and it might even be a majority of global citizens, the experience of using the internet is the same as the experience of using your mobile phone. So, we all had the benefit here in the States of getting CDs in the mail from America Online in 1995 and plugging it in and trying it out on our PC. But today, the first time that somebody in rural China might access the internet will be when they get their first smartphone. And so it's a totally different consumer experience. It's a totally different set of expectations that consumers have about the phone. And then in many ways, we see a lot of these kind of global markets leapfrogging the Western experience, right? So they are jumping onto mobile payments, for example, without ever really fully adopting credit cards. And that's going to happen in all sorts of applications. And so the question is, where is that going to happen? And will it impact banking? So one kind of unique, oh, here we go. Sorry, I missed a poll question. So the poll here is just for us, which device are we using most often? And I would think about this as, which device are you accessing the internet with? And unsurprisingly, mobile's in the lead. A few folks claiming that it's their work computer. So about 2/3 of us are using our smartphone, tablet primarily, which probably is a fairly common answer here in the States. So one unique phenomenon, I'll call it, that's emerged in the past decade really is what we call the super app. So the super app probably came out of China first. We saw the rise of Alipay and of Tencent's WeChat as very, very popular payment apps and very, very popular social media apps. And over time, what these kind of internet giants have done in China, they've started adding more and more functionality on top of what was just a Facebook clone, right? It became a Facebook clone plus Uber, and then it became a Facebook clone plus Uber plus Netflix, et cetera, et cetera. And so today, you can, almost have one app on your phone in China for social media, entertainment, transportation, e-commerce, right? On-demand services. And we see these super apps kind of expanding and proliferating throughout Southeast Asia and even into South America. And these are just a few examples here on the page. I think, do we have a poll question for this, Dan? Oh, it's the next one. Quick note here. Very interesting phenomenon with these super apps. I believe this is our screenshots of WeChat. There is actually an app store within WeChat. So if you can imagine, it's application inception, apps within apps. You can download WeChat and then never visit the iPhone app store again, right? Then you can go download an e-commerce app within WeChat. You can go and download, I think this is either Netflix or HBO Go with Game of Thrones on it. And it's a kind of a pretty wild idea that hasn't arrived here in the States yet. So the big question that our clients, the banks, are struggling with here in the States are, who's the next super app going to be here in the West? And is it going to be Chase, Wells Fargo, Bank of America, or is it more likely to be Amazon, Facebook, Uber, et cetera? Now I think we have a poll question, which is just to get the opinion of the audience. What's most likely to become a super app? Let me see. No? There we go. So the poll question we have is, should banks become a super app? Should you go to your Bank of America app, open it up, and be able to access e-commerce? Would you want to order a taxi through your Bank of America app? Would you want to order food delivery? Yes, so pretty strong responses here, pretty strong no. We do not culturally want to use our banks as kind of a one-stop shop. So it's an issue of trust, right? Just kind of consumer expectations around trust here in America. And it's the way that we have been developed as consumers to use apps on our cell phone and to think about going to different apps for different purposes. And I would say that's probably what we would agree on as at MasterCard as well, which is we do not expect super apps to take over the market here in America. But what we do see is more and more integration in the future. And I think that this is what our clients are thinking about as well. They certainly do not expect to become the next Amazon.com. They may be a little bit afraid of Amazon becoming the next bank, but the strategy to overcome that is integration. So here's an example. I think I bought my daughter something like a hairpin from American Girl. It was $100. And luckily, as I checked out, I had an offer for financing from a firm, right? And I think we're going to see more and more of that. And hopefully, that doesn't just say a firm, but for the big banks, it could say Wells, it could say Bank of America will lend you money for this, et cetera. So we see a lot more partnerships and lead sharing in the future, both on the web and app to app. And then integrations beyond just payments, right? So today, Apple Pay, I think, went a long way towards changing consumer expectations around how you pay and how convenient it is. These point of sale lenders like Affirm and Klarna, I believe that they are changing the expectation around lending. So the question is, what's next? Who's going to change consumer expectations about saving, about getting financial advice, and about even investment advice? Can you imagine a world where your banker is advising you as you make a purchase, whether or not you can afford it, for example, or which account you should pay from, et cetera? Those questions are questions we work on a lot with our clients, especially when it comes to how do you integrate some AI to really make this advice scale. Okay, last trend that I wanted to talk about with the group is this idea of rethinking rewards and loyalty in general. So in the credit card, payment card market, it's fairly well agreed upon that we are living in an era of kind of peak rewards. So this was best exemplified by the Chase Sapphire launch. Famously, we're giving out essentially $1,000 worth of bonus points when you signed up for the card. I think at the time too, it was maybe $400 annual fee. The spend benefits on that card, depending on how you calculate it, are somewhere around 5%. You see a lot of merchant cards that are giving 5% back, et cetera. At some point, the margins completely evaporate, right, for offering credit cards at these kinds of rich rewards. And so our clients are really struggling to think about how do we manage loyalty programs when we've kind of maxed out the amount of cash back that we can give. The other thing that's been going on, I'd say the past 10 years, is this proliferation of loyalty programs. You sort of have a program for every merchant. This is a Hello Kitty credit card that Visa offered. I'd like to point out, you see startups that are gaining market share just by aggregating all of the loyalty rewards programs out there, right? So you see Drop, Dosh, or two apps that do it. Ebates is a web app that does it really well. Just kind of aggregating cash back that merchants are providing and passing part of it on to the customers. I think that everybody was recently reminded of this glut during the COVID crisis because we all got something like 100 emails. So I was very relieved to see that Orvis, the fishing gear supplier, was handling COVID and making the appropriate plans to protect my fishing gear. And then I saw this on Twitter. Somebody shared that Janko Jeans from the 1990s wanted to wish everybody and their families peace and health during this time of crisis. So, you know, obviously just a very visceral reaction that some people had to these emails, but a reminder that you're probably a member of, you know, 100 loyalty programs today. So how does anyone stand out, right? So one thing that we are seeing around the world are kind of more and more subscriptions and memberships versus traditional spend-based loyalty programs. So what do I mean by that? The most famous example would be just the Amazon Prime model. And, you know, really clients around the world, not just in banking, but every merchant client that we have and travel client we have, will always bring up Amazon Prime as, you know, the gold standard of the loyalty program that they are looking to accomplish. So what the Prime model does is it asks the customer to pay some money, right, up front, and that money funds very premium rewards. So you get your 2-day shipping, you get your free videos and your free music and extra storage, et cetera. And so we've seen people try to translate that. Delta came out with this Sky Miles Select model, which is something similar. It kind of replaces your individual upgrades and your individual drink orders, replaces those fees with a single subscription fee. The other thing going on in the market is replacing entire business models with a subscription. So the two examples on this slide are Audi and this startup called Super, which provides home maintenance. And Audi obviously replacing the one-time large purchase of a luxury German car with a subscription, which includes maintenance, et cetera. And then home maintenance combining a lot of maybe little payments and a couple big payments here and there with a little bit of insurance. You don't know what's going to break and when, replacing that with a subscription model. So the question here is, you know, how could this affect banking? How could this affect other business models that are out there? And I believe we have a poll. Okay, so the poll we have is how many subscriptions does your household have? You can estimate here. Yeah, this is crazy. So lots, looks like 50% are at 6 and above, with a solid quarter of you with 11 or more subscriptions. I think I'm probably up there, maybe even higher with 20 or so. And you see this with TV is probably the classic example, right? We've replaced a single exorbitantly large cable bill with 10 or so much smaller streaming bills, and I'm not sure that we're necessarily better off, at least not fiscally. But the question for us is what's going to happen here in the US with these rewards loyalty models, and subscriptions. So one thing that's been very clear over the past decade, I'd say, is this movement to single currency. So you see it with Chase and Citi with their thank you points, and it's replacing all of the points that you were earning across Chase cards and Citi cards, all of the cash back that you were earning, moving it to a single currency of points. Usually they have some consistent value, right, of 1 or 1.5 cents. And the idea is that it's simpler for consumers to understand. It's simpler for the bank to manage. And you get these nice clean UXs too, where we have points and we can spend them in 10 different ways. The other trend that we're seeing here in the States are rewards for not just spending, but for expanding your relationship with the bank. So I think that the best example here is Bank of America's Preferred Rewards program, which is based not on spend, but really on assets held with Bank of America. So obviously, the more assets you hold with a bank, arguably the more valuable of a customer you become, because you could be investing with them, you could be paying more in fees, et cetera. Chase is doing something similar, attracting more inflows with their Chase Sapphire checking. I think they waive certain fees. You get maybe some bonuses if you have a Chase Sapphire card and you move your checking account to them as well. But there's other kind of ways that you can earn instead of just asset levels as well, right? So there's just cross-product loyalty. Hey, if you get your mortgage with us and your checking account and you have our credit card, this is the kind of interest rate you'll get. And then there's on the investment side, bringing assets on. So we work with our largest banks have investment arms, investment management, and retail banking. And we'll work across not just kind of the card businesses, but the investment management as well. And those conversations are usually around how do we deepen relationships right across retail bank and wealth management. Okay, so that was my overview of 3 global trends that I wanted to share. I thought were interesting. We are seeing a lot of questions about these trends around the globe and here at home. And with that, I want to open it up to any questions.
So thank you, Mike. This is Aubrey. Can you hear me?
Yes.
All right, perfect. I will turn my, let me turn my camera back on. So one thing I will say is we've got a few questions in the chat panel that I'm going to go back and read out to you. So I'm going to put on my glasses so I can actually see that. The other thing that we're actually going to also ask, we meant to send out a poll at the start just to see everyone who's responded. I think this is one of the things that we can do with this virtual technology is get a better feel for who's engaged, who's participating in this. So we're going to ask that you can go back and do that. That would be terrific. First, I want to say, Mike, thank you very much for taking us through the insight that you have seen and are seeing in banking and at MasterCard. So I guess the first question I'll ask has come from Seth Tweary, which is, does MasterCard expect to pivot its core business and add complementary business lines or further build out its ecosystem in the coming years?
Yeah, so that's a good question. I would say that I wouldn't call it a pivot. I think that MasterCard's strategy is all around really replacing cash, right, with various forms of digital payments. And we've always had a services arm. I think that services arm has grown over the years, especially as the Western market has matured. And we are kind of adding more services into each large deal that we do as a differentiator. So I think that you'll continue to see the importance of the consulting arm. I think that, on my team, Labs as a Service, I don't see it growing much more beyond kind of the staffing level that we have, just because it is a very unique value prop and it's not necessarily native to MasterCard, the expertise. You could go to anybody and get very similar consulting work, right? But the fact that we can do it in this type of environment, in kind of deep partnership with our bank clients makes us unique. Hopefully that answers your question.
Hopefully it does. If it doesn't, I guess we'll get a little bit more of a follow-up on that one, Mike.
Yeah, please do. If I don't, yeah, add it to the chat.
Yeah, absolutely. So we had another one, a different question here from Dean Nolan, who's really has questions more around driving open banking activities in the U.S. As you kind of alluded to, we see that more overseas, I guess, more so than here, and several different sorts of players here. So you kind of got the Visa Plaid arrangement, Akoi and Finksys, who's getting to this view. What's your kind of view on where do you see open banking really happening kind of in the U.S.? Do you have a view?
Yeah, it's a great question. I think, to date, we've seen it mostly around payments. You could arguably say you've seen small things like being able to check your balance, but a lot of that technology is not true open banking, right? It's sort of screen scraping technology built by Yodlee and others. So I'm really interested in the next phase being beyond payments, being what I'd call core banking functionality, which is lending, advice, wealth management, investing. That's where I'm interested to see open banking really have an impact here. The payment stuff, there's always more innovative digital payments. It's only getting easier, right? It's only getting more and more low touch, contactless. Looking out, 5-10 years, what I'm most interested in is in seeing what other areas of my banking habits it starts to impact.
Gotcha. Okay, I actually would agree with that. And I think we've heard from others in other Finsiders forums where we've talked about how does that get kind of beyond payments. Another one from Jasmine Pate. Will MasterCard expand market opportunities in banking for baby boomers, Gen Z, to make it useful for everyone? I might also expand on that. What does that mean for maybe gig workers or 1099 workers? If you look at that, even segments of that may give you a little bit more meat to chew on there.
That's great. So that's actually a big part of MasterCard's long-term strategy is financial inclusion. And I'd encourage you to just kind of Google MasterCard financial inclusion because we publish a ton of stuff about it. And we try to walk the walk as well. And you'll see that there are probably a few kind of major initiatives that we'll talk about time and time again. One is a partnership with M-Pesa in Kenya, where we help develop and facilitate mobile payments for one of the largest really mobile banks or cash management tools there. And really our CEO, Ajay Banga, would talk about kind of removing cash from the world as a net benefit to folks who are underbanked, to kind of the excluded portions of the economy. Things like gig workers, right? Being able to give them a bank account for the first time, giving them the ability to move cash without fees for the first time ever is going to be really important moving forward.
Yeah, that's a great question. So that certainly seems to get the juices going. So we have another question here from Nick Williams of PayCLT. Mike, can you talk about some B2B trends to go along with those retail trends? So I think you certainly have highlighted a lot of trends around, the super apps and, the loyalty schemes and all that other stuff, which are much more consumer centric. So what are you guys seeing in the B2B side?
Yeah, that's great. So B2B is a very interesting space. I'm lucky because I do get to work with both the small business team at Bank of America and the commercial team. And it is interesting because you see so much hype around consumer constantly. And obviously there's more consumers than there are businesses. And so the marketing's much more prominent, but it's sometimes the B2B feels like second fiddle. I will say that to date, I would say that the innovation around B2B has almost been, what's the right way to put it? It's almost been hacking the B2B payments world. So taking what was just paper checks and putting somebody in between businesses to collect a check, right, and swipe a credit card on the other side. And that's great. And it's a valuable tool, and it's obviously essential and making a huge difference for businesses. I think what's interesting moving forward is how much of that gets to start kind of being published and turned into APIs, right? So how much of the B2B economy gets turned into a digital service, just like maybe Plaid has turned processing, right, into a digital service that any developer can use.
Yeah, I think there's several people that are kind of working on that space around how do you start to digitize that piece.
Yeah.
I think there's a huge volume. I think there's a challenge for, you know, probably the older bookkeepers that may not want to go to that. And sometimes we've had topics on that where generationally, how do you go back from a company culture to get to that point?
Yeah.
So we've got another one from Bart. Do you see any further opportunities for open banking to include enhanced privacy and ability for consumers to keep more control about their own identity and data, aka sovereignty and identity? Are you seeing anything there?
Yeah, I mean, so that one's very interesting because I tried to touch on that when we were talking about open banking. Privacy and data ownership is essential when you're talking about any technology in Europe. For some reason, culturally, it has not taken hold. And for some reason here in the US, we just trust corporations that much more that we'll give our email to everybody. And right, even Janko Jeans apparently has my email address. So I think that something has to happen. And I think you start to see that changing culturally now. Especially, I think, let's say, since kind of 2016 and Cambridge Analytica and all the black eyes that Facebook got in the past 4 years. So I think maybe you'll start to see more regulatory pressure that will start to change data ownership laws. The good news is that a lot of the global companies have already had to adapt to GDPR regulations, have already planned for it. You know, I don't know if it's good or bad that, again, global companies might have an advantage there. But to me, it's almost a matter of time until something happens that will really force the hand of the government to get involved.
Gotcha. So I'm going to give you a chance to take a drink of water there for a second, Mike. I've got another question for you, but I'm being told by the producers we're going to relaunch that last poll that we had, which was to get a little bit more insight around who is attending this, just so we can, I think it'll give us a little more insight around who's participating in this. And you certainly can trust Finsiders. We're not a large corporation, as we get back to the privacy statements we were just making. But I think this will allow us to get a better feel for who our audience is, how do we engage in as we drive topics. So we've got another comment from Sid, who was a panelist on a forum like this, Mike. So it's always nice when we've had people who've come back and spoke to Finsiders come back and ask questions. So he wants to follow up on the whole financial inclusion comment, which says, can you reflect on alternative channels, employers, landlords, et cetera, to engage or expand core banking to low and middle income workers?
Yeah, okay. That's a good question. I think so much of my work, and we call ourselves an innovation team, right? And people come into our office here and we have screens up all over, running demos all the time. And so the immediate assumption is we're going to come up with technology and we're going to build the next app. And we do really have to force our clients to think about, well, what if it's not an app? What if it's something that, you know, your mother, your grandmother has to use? What if it's something that somebody without a phone has to use and benefit from? What does it look like? So I'll say the kind of relevant work that I've done is around financial fraud, specifically impacting elderly folks. And here in America, it's a growing problem. I think every year, the scammers get more numerous or they get better at robocalls. But there, yeah, we've talked a lot about partnerships to kind of address that. And those are partnerships with nonprofits who have existing relationships. And, you know, that's probably the way that you're going to approach certain communities, is going through partnerships that for some reason have already established credibility and communication channels. The gig economy is something I have not worked as much in. And so I can't say anything terribly insightful there, except that I know that there are entire teams at MasterCard working on nothing but enabling gig workers. And I can imagine in the past month that's only become more important.
So I think I've got one final question for you, and then we'll do some wrap up kind of announcements. So this is from a fellow Finsider board member, which is, I think, the biggest concern now is literally staying alive potentially, as we see all that, the terrible news. And I would even go back, as you went back to the elder fraud. I read a few articles this morning about, how the fraudsters are trying to take advantage of this latest crisis. So what is that? I guess, what does that mean for literally staying alive and figuratively keeping business alive as we kind of deal with this? Do you have any kind of closing thoughts on that?
Well, I mean, I'd say that financial technology generally has a big part to play, right? So just last week, I had to walk through on the phone through several phone calls, walk my mother through signing up for Shipt, the grocery delivery app, right? And I imagine that was not an uncommon experience that folks were having last week. And cash today is seen as something that you need to Purell, right? Directly. Yep. And unfortunately, it's made of paper, most of it. So I see this as really a moment that a lot of these financial technology providers are going to get a whole new wave of customers. And we'll see if they are able to maintain that and keep those customers if and when, hopefully, COVID-19 goes away. But it's not just about, kind of business as usual and, lending's going to go down and credit card spend is going to go down, right? Instead, it's a moment to focus on these opportunities and focus on the new consumers that are coming on board who are not the early adopters.
Okay, perfect. Well, thank you. I've just so you know, Mike, I've taken control back from you. I'm showing your thank you slide. Awesome. and your details there, email address at MasterCard. So I guess if anyone has the other questions, they can go back and follow up with you. So thank you so much for coming on.
Thank you again. Thank you for having me. Thanks for everybody for sticking around.
Yeah, no, this is awesome. And I appreciate you guys for coming back and completing the poll. We will have one last poll before we get done, but I want to go through just some closing announcements. A lot of times this is always tell you at the start. Not everyone gets here at the start of the meetings. So we like to go back and remind you, Finsiders, our next program date is going to be in May. We're still finalizing that date, and that may be a physical or virtual event. Mark Woolen, one of our fellow Finsiders, is really driving this event, which is all around valuing financial literacy, which comes back, and I think it's really so important. I think all literacy seems to be quite important now, with all the kids in the United States are not in school, and how are we keeping them up to speed and working and trying to become stay-at-home teachers at the same time. It becomes really, really important. So I think if you come back and attend this event, you really get a great insight from some really key panelists around what does that mean from a financial perspective, since we're no longer showing the schoolhouse rock, which is how I learned how a bill was passed and how a check gets cashed and how do you buy stock. So I'm really interested to see what this panel has to say. And then again, the other point we wanted to go back and push out, FinTech Generations, it's still happening. If you missed this at the front, we are now doing this as a virtual event. So we will have a much broader audience than just the Southeast. FinTech Generations has been the premier digital banking FinTech event in the Southeast. Our goal is it's going to be the premier digital event, especially now in this COVID-19 world. We see so many of these events shutting down. We made the strategic direction to plow forward and shift this to being a virtual event. It will still continue with the QC FinTech Demo Day. So we're going to get to see all of these exciting companies that are in the QC FinTech cohort and how they've matured their ideas since they arrived in Charlotte a few weeks back to where they are when they graduate the program. And again, we're really looking for an expanded set of sponsors who are really associating their brand with thought leaders. And how do you do thought leadership in a digital-oriented world? We think we're going to have a national reach versus a regional reach. So if you're interested, ping me. And the few that have already pinged me on chat, we really do appreciate it, and we will be following up. So with that, Dan, you want to run the last poll? I think we have one last poll, which is, oh, actually, he actually rolled it out. We were out here. So what I will say with this is thank you very much for joining, and we really look forward to seeing you guys at our May event. If it's physical, we'll have the keg running and some light snacks. If it's virtual, bring your own and gather up around Zoom. Thank you.